please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're watching Reporter's Diary. This is Earnings Central. We have Bank of Baroda's numbers flashing on your screens, and we have our banking team, Abhishek and Lata, with us. Lata, coming to you first. We have just a couple of the numbers, net profit and I believe the gross NPA. How is it looking?
Yeah, the gross NPA as a percentage is looking higher, which is a disturbing number. But I am looking for the actual aggregate gross NPA.
Absolute gross NPA is at 48,480 crores. So that's an uptick of about 4.7% on a sequential basis. So I'll just read the number for you, Lata. 48,480.4 crores. That compares to 46,306.8 crores. So on a sequential basis, it is up by 4.7% quarter on quarter. And the NII, the net interest income, is at 4,394 crores. That's very high given the fact that we were working with a number of 3,745 crores. So if you compare the number in their results per se, the NII is up 40.2% on a YOY basis, while on a sequential basis, it is up by 18.1%. Lata.
Okay.
Abhishek, why is the net profit significantly lower than what you had
that could be just higher provisioning. I'm not really worried about the net profit. But I think the positive here is that the NII number is very good. But if the NII number is good, I mean, do you still, I'm still trying my level best to open the system itself. The negative part so far is that, as Abhishek points out, even the aggregate NPAs have gone up. This, of course, need not necessarily mean that slippages would have gone up. It could also be that recoveries were lower than last last quarter, or upgrades were lower than last quarter, write-offs were lower than last quarter. So we are only grappling with very few numbers. And to be fair, it's not a very big jump. From 46,000 crores, it has gone up to 48,000 crores. So it's a 2,000 crore jump or a 4% jump. We are not, it's not a runaway rise that we are seeing in gross NPAs. It's a marginal increase. But I just want to know whether, Abhishek, we've got the advances figure. The advances have gone up substantially. Actually, they've gone up from 3.4 lakh crore to 3.9 lakh crore, if I'm not mistaken. Okay, but yeah, that's year on year. If you go from 31st March, it has gone up from 3.8 lakh crore to 3.9 lakh crore. Even then, it looks like not a bad number. Sometimes
sequentially, the loan growth is at 3.1%. So if you look at the aggregated loan book, it is close to 4 lakh crore. That compares to about 3.87 lakh crore in the previous quarter. So sequentially,
so from 3.87, they've gone to 3.99.
3.99. So that's a jump of about 3.1% on a sequential basis. But what is heartening to see is, I guess there is net interest margin expansion because your loan growth is at just 3.1%, but your net interest income is up by 18% on a sequential basis. So it obviously shows that, you know, net interest margin must have improved. Last quarter, their domestic net interest margin was at 2.68%. I'm just highlighting the previous quarter's number. So that must have improved, because if you look at the numerator has increased while denominator has not increased in that manner. So it's just a calculation per se that net interest margin must have gone up.
Okay,
yeah, it logically looks that net interest margin, as before I get to Darpin Shah and Siddharth Purohit, both of them, of course, need to know some of the numbers. I think the provision coverage ratio looks fairly healthy. Abhishek, you'll have to tell me about the previous. It is 68.03. So that's a fairly good, I mean, among public sector banks, one of the highest provision coverage ratios that I can think of.
It was at 67.2 in the previous quarter.
That's an improvement.
That's an improvement.
And considering that as NPAs age, they will actually have to provide even more, you know, in subsequent quarters. And therefore, there are some healthy points to note. There is a loan growth, but that's true of everyone. And, you know, we are comparing slack season quarter to a heavy season quarter. So, you know, the monsoon months don't see so much of loan growth. Compared to that, a 3.1% growth in loans is not something to celebrate about, but still it is a growth. Year on year, there will be growth because the year ago quarter
Lata,
was demo quarter.
As I was highlighting that net interest margin must have improved, the net interest margin for the domestic business has improved to to 3.24% from 2.68% in the previous quarter. So there is a jump of about 56 basis points in the domestic net interest margin. While if you look at the overall net interest margin, that has jumped by 41 basis points quarter on quarter to 2.72% versus 2.31% in the previous quarter.
Okay, I think you have to go a little slowly. 2.7% is the NIM compared to 2.2 only for overall.
Or 2.72 compares to 2.31.
Okay.
So there is a jump of about.
So what was the overall NIMs that you were reading? Net interest margin for global improves by 41 basis points.
41 basis point is the overall improvement, while for domestic operations, see, they have been curtailing their international operations. So that book has been coming down. The overall business in the international book has been coming down.
But even the domestic NIM has gone up.
But the domestic net interest margin for the first time in multiple quarters has crossed the 3% level. So that is at 3.24, which compares to 2.6.
Okay, there's another very important point that the press release points out. The cost to income ratio has improved to 39.8 from 44.2. This is a 5 percentage point improvement in cost to income. I can't remember when we last saw such a substantial improvement in the cost to income ratio. So they have been able to control their OPEX. I wouldn't know how, but OPEX has, total expenses have clearly fallen. Of course, the interest expenses itself has fallen by 5%, but my sense is that they have been able to control other expenses as well. Of course, other income has also fallen, which is a natural consequence. They would have made a lot of provisioning. I don't know whether their provision for NPA has almost doubled from 1,600 crores to 3,100 crores. But clearly there would be mark-to-market losses on the bond book, which has also would have taken its toll. Some more other important numbers. Total deposits are at 5.7 lakh crore, which is a reduction from the year ago levels, but that is natural. A year ago was demo, and therefore there was an accretion of deposits. The percentage of current and savings account is almost steady, risen by about 10 basis points. 40.57 versus 40.46. But that is a seminal achievement because year ago, again, let us remember, it was demo time. So everybody had a lot of CASA, and in spite of it, they've been able to increase their current and savings account. Well, that's the bunch. Total income has gone up by 6.5%. Net interest income is the best performing number, going up by 40% to 4,394 crores from 1,600 odd crores. And net interest margin, as Abhishek has already pointed out, up 41 basis points to 2.72, and the domestic NIMs itself improving by 56 basis points. Okay, I think that's a lot of numbers that we can analyze, especially the cost to income ratio, which has gone down by 5 percentage points. Darpin Shah of HDFC Securities and Siddharth Purohit are with us. Siddharth, first thoughts?
Lata, on the profit and loss side, it has really been impressive. Like, after a long time, we are seeing that interest income has grown. And there is also one interesting point is that, interest expenses has kind of declined rather. And that has resulted in a very impressive number in terms of net interest income.
Okay.
And surprisingly, even the other income has also been decent enough, no doubt. Treasury income would not have been there. And considering that also, I think other income has been fair enough.
Okay.
Provisions has gone up, but I think we need to see the slippages number because even in the absolute term, GNP has gone up.
I agree. It's gone up by 2,000 crores, to be fair. It's not a great deal. So 4% increase in GNPs. Darpin Shah, first thoughts?
But I heard yours and Abhishek's conversation entirely. There are a couple of things which I'd like to point out.
Please.
So if you see their NII, which is at 4,394 crores, but there is one portion in interest income called others.
Yes.
Which has substantially gone up from around 350, 360 odd crores to around 620 odd crores.
I see.
So that is 300, 350 odd crores kind of a rise, which I guess will be interest on tax refunds, So that could be one of the reasons why you are seeing NII at such a higher level. Even for existing that or normalizing it, still the NII number is higher than estimates. That is the first part. Second, if you see the notes to accounts, I don't know if it's correct number or there is something wrong in it. The press release, the notes to accounts says we need to provide around 857 odd crores in the next quarter for NCLT or the IBC exposures. That is a big number.
Correct.
So that is slightly on a disappointing side. Actually, if there is a we need to understand from the management why such a high number, while we are already seeing the provision coverage for the entire bank as a whole at around 68% odd. Coming on asset quality front, while GNPs are marginally at 4-5%, I guess, one large telecom exposure is being factored as NPA this quarter.
But that could be written back.
Yeah, that's what I said. It will be for this quarter I'm seeing.
Okay.
So that could be one of the reasons why you're seeing GNPs, higher by around 2,000 crores on a net basis.
So we need not as yet worry about the rise in NPA.
Yes.
It could
so
be written.
that is my assumption. That is my assumption.
Course,
I'm not. Yeah.
Darpin, just taking your point forward on that remaining 857 crore. During the quarter, the bank has made a provision of 145 crores on this RBI directives under the accounts which are under IBC, and they need to provide 857 crore in the coming quarter. More to do with provision for NPA, like what we have been observing with other PSU banks is that, Lata, between 1/4 to 1/3 of the provisions is going into depreciation for investment, that is mark to market losses on treasury. But over here, if you look, the provision for NPA is at 3,155 crores. So that compares to 3,400 odd crores of total provision. So credit cost has increased. If you calculate the credit cost on an annualized basis, that is at 316 basis point. That compares to about 191 basis point in the previous quarter. We need to understand why this credit cost has increased despite the...
Isn't it logical? Because NPA's age, you have to
It's
provide
not only
more.
NPA age. Your provision coverage ratio has not gone up substantially. So we need to see the movement in terms of gross NPA, whether there are higher slippages and therefore the higher amount of provisioning made. Because as I observed with other banks' results, it is more to do with provision for investment book. But unlike Bank of Baroda, the credit cost has increased, and that is substantial. It's a jump of about 125 basis point on a sequential basis. So we need to understand whether slippages have increased or, as you say, aging. But more to do, if you look at the gross NPA number, more to do with higher slippages is my guess.
Okay. Well, that number we will know only when the analysts meet or the press conference happens. And we should be cutting to the press conference shortly. Siddharth, you have had a little more time. Any further observations? I mean, I'm assuming you can read the P&L on your phone.
That's just the point taking forward from what Abhishek said. In fact, the loan loss provision, in fact, has gone up substantially quarter on quarter. So that means simultaneously we are seeing that, in absolute terms, the GNPA number has gone up. So I believe that slippages number would have kind of, been higher than what we would have estimated earlier.
Well, okay, I think the last number we have is 3,400 crores.
3,450.
What are you expecting?
In fact,
Siddharth, you have a number in mind?
In fact, I was expecting that, the slippages could have been somewhat similar to what we reported we saw last quarter. But now that, in absolute terms, it has gone up by almost 2,200 crores. So I think the slippages would have been much higher than that.
Could be, okay. Darpin, what would be your interpretation of the fact that credit cost is up and GNPAs are higher?
So there should be some kind of a write-off which they have done, I guess.
Okay.
Because the ratio has also gone up on both sides. So let to figure out further details on it.
Okay. All right. What are your thoughts on the stock itself, Darpin, now that you have the number? And also, are you impressed by the growth in NII, or would you just put it to that others number?
No. So as I mentioned earlier, existing for others also, the NII growth is very healthy.
Very impressive. Okay. So you have any positive rating on the stock?
Yeah, we have a buy rating on the stock.
And you would want to tweak the price level?
So as of now, without tweaking the numbers, as of now the price target was around 205 odd rupees.
Okay.
So we'll maintain that as of now.
Siddharth, you have a rating or a price target?
Yeah, we have a positive stand on the bank. And if you look at, just one point is that, the loan trajectory has started picking up.
Yes.
So Now, if asset quality, no doubt, is one part of the worry that has been there for many quarters. But now that loan growth is picking up, without changing my estimate, I still have a positive view on the stock with a target price of 225 on it.
All right. Thank you very much, Siddharth. Well, the last word, Siddharth and Darpin, the last word definitely goes to Abhishek.
Well, Lata, it's a mixed bag. You know, if you see the P&L is very strong. You have the top line growing and that is aiding your operating profit.
That's true.
Operating profit growth is at 20% on a sequential basis. So that's pretty strong. Given
Actually,
the fact
I'm definitely impressed by the cost to income.
Correct. So there is no other income also which is actually aiding your revenue. So it's core income. Even if you adjust for that one-off that Darpin did mention of about 300 odd crores, the operating profit would still grow by 10 to 12% on a sequential basis. So P&L wise, still operating profit, it's very good. But the problem lies in the credit cost. The spike in credit cost is not only on account of aging of NPAs, but if you see there is movement in gross NPA, so there must have been slippages coming on. So the stress on the balance sheet still persists, but as Siddharth pointed out, the loan growth is back. Yes, last quarter the loan growth was at 2.6% on a sequential basis. That has improved to 3.1, 3.2% in the current quarter. So loan growth trajectory is picking up. Amongst all the PSU banks, what I've seen is largely the sequential loan growth is between 5 to 6%, and even for Bank of Baroda, the loan growth is picking up. So the heartening point to take is loan growth driving the P&L, but stress on the balance sheet remains.